Hello everyone, Patrick Nelson here, joined by Ivan Churilov. Happy New Year.
I reckon we should just say Ivan T.
Ivan T.
I reckon I should just get rid of the Churilov and just simplify.
All right. Well,
Happy New Year.
Before we head down that rabbit hole, thank you very much for joining us. Disclaimer time. Any advice contained in today's presentation is general only, doesn't take into consideration your personal circumstances, and you need to decide for yourself whether it's appropriate for you. I did post an invite to this session today on LinkedIn, so there might be a couple of people here that aren't usually at our session, so welcome if you are. We are going to be talking about what's going on in the market. We're going to have a look at what's happened over the New Year period, have a look at trades that are lining up. As always, look at some implied volatility stuff, maybe have a look at some IV trades that they're not quite there yet, but in a couple of days could line up nicely. And just generally take questions and discuss anything you guys want to talk about. So Happy New Year, Paul. Happy New Year to everyone else online today. We hope you've had a nice break. Obviously, it's been a bit going on over the period in Australia. If you had a break, for anyone affected by bushfires, we hope you're doing okay. And look, let's get into it. So, all right. So let's get into it. So, look, first of all, let's have a look at XJO. And just have a look at volatility.
Actually, just before we do that, just quickly, a quick, I guess, FYI to everyone. We're going to be releasing some more stuff, some more cool stuff. We've been slaving away on our platform a fair bit over the last couple of months. In particular, some of this we've previewed in the dashboard, in the new the new landing page, which is a lot more order management system kind of information in things like cost of sales and a bunch of this
market depth is a big one.
We've actually you haven't even seen this on yours, but it's now visual. You can see levels.
Okay.
There's so much stuff coming out. We're now just trying to find out the right way to release it to everyone. You've come up with a brilliant idea as a intermediary stopgap to get it out sooner.
Okay, so just on that, are you expecting that we might be doing a release in the next week or so?
I can't answer that question. The stuff is built. The problem is we've just got to make sure that it doesn't break anything else. Put it into the overall framework. But yeah, super excited. There's a bunch of cool stuff coming out, and for anybody who's using advanced order management systems like Iris, or sort of other broker platforms. This is going to be massive for you.
This will supersede all that stuff. So
hopefully,
Now, if you're on the session today through that invite I put on LinkedIn, and so you're not a client, and you would like to take a trial of the platform, just type in yes into the chat box, and we'll organise that for you. So just type in yes into that chat box, and we'll sort you out. And that'll give you access to the platform, our trade ideas, all our market updates. You'll be able to continue to get to these trade groups. And get all the other information that we provide. So just type in yes, and we'll get you sorted.
Thanks to those that just did that.
Yeah. All right. So anyway, so first of all, World War. Yeah. It's always interesting to when you're looking at there's an issue like the Russians shoot down a plane or in Ukraine or Iran or US or whatever it might be, and you're thinking, wow, what's going to happen? Is this really going to escalate? The press are out there, they're talking about and really obviously trying to sell newspapers and get you to click on stuff, so it's in their interest to puff the story up as much as possible. But is it something, what does the market think about it? Go and have a look at implied volatility. It will tell you. And it went up to 12 off the back of a pullback in Australia, but it just really didn't do anything. Not anything of note. So
and the trading in US was in particular interesting, right? I mean, it overnight, the future. So this is the interesting thing, actually. I'll maybe I'll add a bit of clarity from a trader's perspective onto this, but the reason why news react in particular as heavily as they do. And so you get things like US open. I mean, we were down 60 or 70 points, I think, yesterday on the back of Iran bombing a US military base in Iraq, and which is funny. I mean, it's all. There's been no escalation in Iran. There's been no escalation in US. It's all on Iraq soil, and really, it's something that's been brewing for over 10 years.
Yeah.
So way longer. I mean, if you really want to go, I mean, Bush Senior was behind some interesting conflicts there. So it's always been in US's interest to create conflict in that region.
Yeah. Well, those guys got together over the ISIS, and then anyway, there's a whole story.
But it's a
good story.
Well, I'm not sure about good. Bloody, but anyway, but from a trader's point of view, this sort of traditionally what used to happen is something like that comes out, especially if it comes out outside of market hours, outside of session. It's really cheap to push S&P futures. So there's not a lot of volume. People panic. There's a news story. In the last maybe 5, 6, 7 years in particular, that's been replaced by algorithms. And now you go in and say, it's light volume, not all heap trading. It doesn't take a lot of money to go in and smash the market, trigger some stops, and create a rollover effect. Now, what then happens in the US session when it opens up, if you've noticed, then you start looking for news events that are slightly positive. Like Trump comes out and says, we're going to go in and put sanctions onto Iran, which, okay, and then they use that as an excuse to buy up. So they're going to start buying up all the stuff that they've pushed. So really, it's the little guy who's sitting there trying to trade S&P out of hours that gets smashed, and anybody who might have had stop losses while they go to bed. And it's just such a good time for these guys, the big, heavy guys, to make money. So if you think about what does the war between Iran and US mean offshore to McDonald's or Coca-Cola or GE or in Australia to BHP, nothing. There's no impact.
Yeah.
Unless you've got some, it's something to do with oil in a particular region, which is owned by one of the companies, or is a supplier of it. It's not directly attributable. In fact, if anything, it's actually good because it's listed stocks that like BAE, for example, and Boeing, etc., that benefit from war. They build engines and materials, and the GDP goes up, and there's so war is actually good for a lot of stocks. And it's the emotional attribution of those news stories just by the big guys pushing shit around. Really, that's what it is. Yeah. And so then you step back and you go, okay, war doesn't mean anything, which is why we're up 66 points. We've just reversed everything yesterday. We're again at almost the all-time high.
Yeah. Well, I think if we were going down a path where the market thought there could be escalation, and then on the back of that escalation there could be unknown factors, that you might have seen volatility go up further. But I just think that what the market reflects at the moment is it doesn't see that escalation. It's just looking at it going, this is sort of a non-event. Yes, it's an event, but it's not something that in the scheme of things is going to have an impact.
I guess one final thought from me on this is that the one thing that I guess is interesting, and this is where the big guys are really, my understanding is where they'd be thinking about this right now. We're at this interesting, and we're back to a pivotal point. Every time the market sold off, it's showing signs of shakiness. Free money comes in, people buy up stocks because it just makes sense from a dividend point of view. But now we're sitting at this point in time, and I do wonder if all of this stuff is really breaking under the blanket and there is something occurring. I can't help but think that there is big players out there creating a perfect blow-off top situation. So they'll take this through the 52-week high, they'll keep it there for as long as it needs to be, and then when the narrative suits, they'll smash the market down. I think it's difficult to ignore the real things that are happening with stocks. US forward P&E ratios are dismal. Forecasts are low. They've always been low for the past, X amount of time, and they've created this whole situation where you go high forecast, revise the forecast down when nobody's looking at them, and then beat the forecast, go, oh great, let's all celebrate, and then you rinse repeat. And I wonder if, what's the smart money doing, I guess is the question.
Yeah.
And would you go on and bet on another 20% increase this year?
Well, so if you look at a volatility, if we look at it over, let's go over a 5-year period. No, we're not going to get 5, but we'll get for instance, we've been looking back in 2005. You can see what's happening there and where it's at, and if you go back over the year, that's a reflection of what happened over the last 12 months. Maybe just having a look in over a month to get go a little bit more granular on it. So, where are we here? Pre-Christmas, I think this would have been what day we were 20. Oh, maybe it was back about here, about the 19th or somewhere like that. We ran our last session. We were sitting at around 10. Volatility went down a little bit further from there, and it went, it stayed around that 9 level through the Christmas period, and then popped up. And we've had some events going on, and just a bit more action in the market and movement around, and it's sitting at 11.
But I mean, 10% is crazy, right? That's saying that there's 68% chance that the market trades within a 600-point range. It's like, what's the likelihood of that? It's crazy.
Yeah. Oh gosh. Get rid of some of these lines.
I love how the 50-day moving average is still there.
I haven't logged into this computer for a while. Your favourite computer?
Well, it's working.
It's working today.
It's it's not.
Maybe we turned it off. It's been on for a year.
You gave it some sleep.
All right, so here we go with XJO, and back to volatility.
Paul just mentioned direction of AUD is affecting quite a few of our stocks too. Yeah, correct.
Yeah.
And you get commodities playing a part in on the back of the US movement as well. Oil spikes on the back of some of this. Yeah, I mean, definitely. I'm not trying to discount geopolitical tensions in commodity markets and how that sort of trickles down for the individual stock when you're thinking about it, which is really where a lot of the flow is coming from. I mean, it's no secret that institutional participation is generally not as high as it used to be. And there's a lot of sort of retail, kind of a pseudo-retail in trading going in the market at the moment, and that the average, Joe isn't looking for, when they're making a decision, they're not going to think, oh, okay, US-Iran war is going to give me a reason why I shouldn't buy BHP for a dividend. How relevant is the 50-day moving average in a fast and dynamic environment? Depends how you trade. Pete, if you're trading intraday, you probably wouldn't be looking for a 50-day moving average. You'd probably be looking at a 50-minute or 50 period moving average on like a 5-minute chart or a 15-minute chart or a 4-hour chart, depending on what your time frame is. We, I guess, as it's something we talk a fair bit about, and I probably haven't for a little while. Both Pat and myself come from experiences, slightly different, but experiences in trading, proper trading. And as of, we don't want to be sitting staring at the screen all day long these days. So as much, well, maybe we do, but we just can't afford the time. I mean, down to the point that now, one of the main reasons why we added a retail desk to go and do full service in Sydney is there's a selfish element there, which is that it can go execute our orders. So I think that the way that we design our systems, the way we design our trading systems, we want to completely isolate out the noise and trade really try and trade.
Absolutely. Now Trudy just mentioned this little box here, which gets rid of the other bits and pieces if you click on it.
Yeah.
So it is pretty cool, isn't it, Trudy?
It's actually a bit of a change to the charting layout as well. It's going to be a little bit clearer.
Yeah, good.
Yeah.
Excellent. Right, so there's a bit going on. So, but Peter, I hope that answers your question. 50-day moving average. Look, in terms of the rules we set up, there's certain periods of, times where things work better than other times, right? That's trading. And we kind of sit there going, anything that we're doing is back tested over a long period of time. So we've got a belief system around it, but that doesn't mean that that is a rigid belief system that is not going to be adapted in the future based on what we observe. So it's an interesting time. So now, where do we go from here? Okay, so I'm just going to make a couple of comments on XJO, and probably what I'm thinking in terms of trading will be I will struggle to trade a bearish position when I've got an uptrending market. So that's a difficult one for me. But people who are trading range trading have been probably making the most amount of money. So that's just not how I trade. So I know Tim, who had the doctor's appointment because couldn't sit in the session today, will be probably range trading this stuff right now. I don't know, but he'll be waiting to see, at these levels, he might have trades that he's looking at across some different stocks and so forth, and be trading resistance levels and so forth. But overall, we're obviously overall we're in a trend where the market's trending up. There's been lots of lines that people have been drawing, and uptrending support lines that have been coming in that have been pretty strong. And if that's what you look at, that's what you look at, and they would have been working for you. But sitting here, probably what I'm looking at, Ivan, would be either a consolidation at this level, which I'd most likely be looking at a long straddle, and what I'd be looking at is to see implied volatility down at 10 and maybe even 9.5 or something like that. That'd be okay. I'm now, if I'm up at a pivot point. I think that from that pivot point, the most likely scenario will be a blow-off or a breakthrough.
Yeah.
Right. If there's a blow-off, then IV will go up should go up, and I can make money out of that, and I can also make money on a 100-point move down. Good money on a 100-point move down if it happens within a 10 trading day period. Right. On the upside, if it breaks out and goes up, I might also then move my position to a bullish position and trade it as a bullish trade with a repair on it if it moves on the downside. So that's probably what I'm looking at the moment. Either we see a breakthrough and we'll move to look at some bullish trades on the up. If I see a consolidation of 2 or 3 days, I would expect to see IV come off with that. If it gets to sort of 10, 9.5, then I'll be pricing trades up there.
Yeah.
Right. We did a similar trade before Christmas, which worked quite well. I probably was punished a little bit because of and didn't really think about the amount of public holidays that were occurring. So the time decay that came out in that period, and also the lack of volatility.
Yeah.
But it still worked. Still made money on it. It's still got a good return on it. But that was just a long straddle that we talked about, which is the 68.50 call, 68.50 bought call and bought put. And we saw a sell off, and anyway.
When did you cover? I remember you texted me. When did you close it?
I can't remember.
It was
somewhere. It was like here.
Yeah.
It was like here or something.
Yeah.
Yeah.
Yeah, because it was early in the year.
Yeah. So it sold off.
Good work.
And
good work. You had the ball spike. It's good. I think that if you look at this from here, so this is probably the difference between Tim's approach and your approach. And I like your approach a whole heap more. But
well, it's all right. If you're looking at the market all day long, then range trading, and you've got a feel for things, then.
But so this look, I think that the bet is the market not going to go anywhere, fall off, or do you not care? Yeah. And so your view is that you think, okay, well, there's 2 scenarios here: blow off top, or it takes out the highs, goes higher, and you're expecting a bit of consolidation there. As soon as the consolidation happens, you're saying, I don't care where it goes. Either it's fine.
Yeah.
Buy yourself enough time decay so you don't get destroyed on that. So do like a February or March or something, which probably price it up, and then close it 50% into that period. Yeah. And then we're done. So it makes sense. Yes, IV rank's a bit higher. yes, you'll make money if IV pops and you get in, when IV's down maybe or sub 20 would be really what you'd be looking at, the IV rank, I should say.
So you're at 42 days.
I'd probably go March.
Would you go March? Okay, interesting.
No, because you wouldn't close it in March. You just don't get hit by the time decay as much. So.
Yeah. Okay. All right. Yeah.
But I mean, you can compare it. So try do a clone.
Why so that's 68.25. That's interesting.
Because it's based on the March. This is the futures. March DVs coming out. So if you click clone on that, and we'll compare it to the Feb. All right. So go expiries. Just there's a big button there where you can go on and take all of it. Thanks,
you didn't see the pain on your face.
Yeah, you're never living that down. So that's going to cost you an extra $600 more. Yep. But then go look at the payoff diagram. And so when are we thinking? So if it's going to be, well, Jan 23rd, you're going to lose $200 in time decay. Right, in 1 month. Sorry, go straight on the 68.86, right? On the. Thanks. You give up. So January 23, $288 of time decay. Feb 6, 617. Compare that with your Feb here. You're paying a little bit more, but you're looking at $380, so about 50% more. On the same
impact of Delta though.
Impact of Delta. Yes, true.
So go back to.
True. So if it's going out to here,
25. Yeah.
Sure. Right.
And then go back to the Fed.
Right. Yeah.
And so that's, I guess, from my perspective, I would be weighing up. I'm not saying. So what you'd be weighing up is with this particular trade, I'm saying.
Sorry, I'll just one thing. The one thing that probably matters more to this trade is more if you're buying vol here and selling there, for example. That's 20% increase in vol, and that's where you're really.
Yes.
That's the thing that'd be.
So the vol on the longer dated, shorter dated won't matter.
It won't be a big
if that won't be a factor. So just on so if you were looking at this, let me open up a different tab so we can go back. Right. So just to finish off on this particular trade, and then we'll move on. So what am I thinking? I'm going, okay, I'm up at a pivot point, right? So I'm not, again, I'd be waiting for volatility to come off, probably about 10% from where it is now, maybe 15% from where it is now, and then I set the trade up. So from that, I'm having an opinion about a couple of things. One is I'm having an opinion that I don't think volatility can go a whole heap further down, but I think it can go so maybe I think it can go down another 10%, 15%, but I think it can go up 30 or 40% pretty easily. Yeah. So I think more likely is that over the period of the next 10 days, that in that time, it will be up 20%. It might be down 10%, but it will equally, it's more likely it could go down 10 and then be up another 30. And so I'm swimming within that realm of possibility. And I also think from a pivot point, with a couple of days consolidation, that I would see a move within the next 10 days, which will see something like that, something like that, something like that, something like that. And any of those sorts of scenarios work for me, or we see a breakup and a move up. Now, a breakout and a move up, I might actually move my position bullish because that meets my rules for a breakout trade, but I would equally might just enter into another trade.
The only thing is you can get one of these situations where it takes out, creates a 52-week high and goes on. The only thing that's really important here, and this is news driven, so take it with a grain of salt, but these two big bars, especially that third bar, even though that it had that big sell-off as a result of the news, it bought it up. I mean, it's a big candle, 3 big candles. There's some serious buying pressure there. Yep. So you'd think that the momentum will continue going higher for another 150 points. Yep. The question is what it's going to do at 7,000.
So you would sit back here and say, okay, if I go to my Feb, here I'm saying I'm risking $2,000. I would probably be looking at doing 4 contracts if I did this. Maybe. Oh,
Heavy hitter.
heavy hitter. So active 3, not 13.
You click the one. Click the one. Click the one. No, just click the one twice. Yes, you've used the calculator.
I like to override. All right. Anyway, that's not doing it for me either. So maybe, anyway. So if I do, say if I take this position, then and I'm looking at closing it by the 23rd of Jan. So when I go into this position, I'm not saying I expect this thing, my view on this pivot is that the move's going to happen in 5 days' time, right? And I will allow as much as 10 days of my time to be in the trade, right?
So 23rd is pretty much the latest.
Yeah, so 23rd is more than enough time for me to be in this trade. So if it's the 23rd, from a time decay perspective, I've lost $1,000, $1,200 bucks, let's say.
If it doesn't go
throw bro in there, a little bit more than 1,200. So if it goes nowhere, it's sitting exactly where it was sitting, volatility is at the same level, but I've allowed 14 days or 13 days of time decay to occur, then I've lost 1,200 bucks. So yes, I'm putting $6,000 into the trade, but I'm risking one. Yeah. Right now, if it does what I think it can do, and it goes, say, back down to this level here,
100 points, yeah.
100 points.
Yeah.
Then based on pricing that trade up, you've got 315 bucks. So what
you've got by the 23rd, but the big thing, this is where I'm just going to bring this up, go to the grid. Vol you would expect, so IV HV 70.
Yeah.
Right, 0.7, so it means that IV is significantly cheaper, so you'd expect it to be up at least 20%. You'd probably be looking for a move sort of from 10 to 12, so it's sort of there in that 15 so that's really what you're looking at. Yeah. You're looking for a shift of, at around here down to sort of 2-3%, vol up 50, and then a little bit of time to
that's where we make our money.
And you triple.
And it's also worth saying that again you'd be waiting for the volatility to come out of this before you're doing this trade. So the pricing that exists here, you'd be probably getting it around 5K for the same trade, and you'd be looking for it to, if it just went back to say this level, then you'd be looking at it to be worth around 6K.
Yeah.
Right. So that's without anything else happening. So without going into it too further than that, if anyone wants to discuss those trades, price them up, you can go into the options cookbook and then play around with them. But I really encourage you to go into the payoff grid and play around with volatility to see how that would impact the value of that particular position. All right. So let's go.
Once IV drops a bit more, maybe a 67, 30 days to expiry put calendar, less risk and a modest move will achieve a 50% return for early exit. Paul is probably expressing a slightly different view. Ultimately, I get what you're trying to do, and you're sort of, yes, it's slightly different. But in terms of what Patrick's view is, so he expects that to occur, but he's going to make money if it doesn't.
Yeah.
So as long as it blatantly doesn't sit there, pure statistics, there's a 55% chance that the market continues going higher. From these levels. Yeah. Pure statistics. Ignoring that it's 52-week high, whatever.
Yeah. So it's a position that presents itself when I look at volatility and consider, obviously it's a view, but I consider volatility below, and I think it's going to revert back to more normal levels, or at least spike in a period of time.
Yeah.
And I match that with the fact that I'm at a pivot point.
Yeah.
Right. So if this breaks up and goes up, I'll be just looking at a bullish trade. If it goes down, well, I won't be doing this trade. I'll be waiting.
Yeah.
So they're the scenarios that'll happen. It's not a trade to do just yet, but something like this will give me the trade, or something like that will give me the trade with a couple of days where we consolidate, volatility comes out, then we can set our position and go long vol and have an each way bet on the market move. But I like an each way bet at a pivot point.
Yeah.
I don't like it when I'm in the middle. If I'm here, because if you go down a little bit, then up a little bit, or go down and then come back, and all those sorts of things happen. So
I think, look, the most important thing about that is you're saying, I don't know what the market's going to do. I'm going to take a position based on a high probability situation of something happening.
Yep.
It's unlikely the market sits to 52-week high and doesn't do anything. So which is why that trade makes all the sense in the world.
Yep. And I've done that trade.
So when are you doing it? Monday? Tomorrow, Monday, yeah?
It'll be Monday. Yeah. It'll be, well, if it lines up, it'll be Monday or Tuesday.
Yeah.
Yeah. We'll have to see the.
I'll be watching your
price. Yeah.
I'll clone it if. Or maybe Tim can put both of our orders.
Yeah, I'll just go in there and do it for you.
Yeah, thanks. Good. Thanks. Yeah.
I'll email you.
You owe me 20 grand. What?
All right, beautiful. Now, okay, is there anything?
What's going on in the trading account? I mean, obviously the interesting thing is that the ADX is a bit low for a little long on the XJO, but that could be an interesting trade as well.
Yeah.
The 50-day moving average is a bit far, which makes it a bit annoying from a little long point of view.
So it's just interesting. Just a comment. I'd be interested in your thoughts on this. We're sitting at those all-time highs, but when we look at the bigger companies, they're not. So what's driving the market at the moment?
Well, have a look at this. Right, this is again my favorite indicator of this. We're up 68 points, 1%. I'm just clicking the wrong screen because I don't even remember what I'm doing anymore. Stock screener. It's not enough coffee for the day. And you look at this, and there is a little bit of red from the top 70. So this is, on a strong day like this at 52-week highs, this is not what you typically get. If we're going, sort of the big changes, new crest oil search, a little bit of red here from Woodside, and so I mean there is what 10-20% actually. You don't have the order management system or the market map. That'd be a better way of looking at it as well.
You could probably log in.
Yeah, okay, maybe I'll do that. I mean, so that's you joke. Say stuff. So that's the stuff. So that's what I think is interesting about this, and it's being typical of what's happening. It's just slow grinding higher, couple of big moves, and it's not everybody following, which means that there's some rebalancing going on. And the other thing that's important, volume is low. And that's what I find interesting. There you go. We got it there,
yeah. Volume's low, but you're not usually, and we'll go into usually what we'd be seeing, and I know ADX is long.
It's going to kick you out, by the way. Just logging in. Well, let's go. Interesting thing. I was just chatting to one of the day traders that I know that literally he just pops and he goes, he never trades through December, January. Too low volume. As a result of this, you get this sort of opportunities present themselves well, and if you're short-term trading like he does,
he's trading massive positions though.
He's trading.
He's got liquidity issues probably.
He's literally
Yeah. I've always, maybe because I had more time to look at the market, I always really enjoyed trading through the Christmas period.
Yeah. But it's different for an options trader.
I paid for the Christmas presents a few times.
Oh, yeah.
All right, so we'll go back straight. So this is going to be the new dashboard screen. So when you log in, you'll be able to.
You can change it later.
Yeah, that's cool, isn't it?
Big market map. That's sort of the position of that. So you got banks, some materials are a bit weird. Weaknesses coming from energy. You can sort of have a look. So that's a new crest. So this has everything in it. So that's a top 200. But you're seeing strength from the banks. That's sort of your thing.
All right. So we'll go in and have a look at the scanner. Anyway, but what I was saying here is that this will be the new dashboard screen that Ivan was referring to earlier. We'll have a little menu item up here saying dashboard, and so when you log in, you'll be able to go here. You can set these pages up. So this is set up so that we've got market depth, a chart. What is this? The order history. And
you wait till you see the up to date. It's cool. It'll tell you exactly what.
And you can set up you know, your mmap, you can set up charts, you can set up everything through this. These tabs, and obviously if we were operating off one screen here, it'd be two screens running at the same time. You can have all the information you need up in front of you. All right, so if we go to...
just really quickly, I didn't have a high degree of confidence to enter the CTX lit long flag this morning. Entry is far away from 50-day moving average, and price action appears to be topping out. Your thoughts from David? Great question. I love the question for two reasons in particular. That, well, one in particular is that you're looking at the 50-day moving average in light of this. In terms of price action, I don't bother bringing up CTX because it doesn't really matter that much. It was that takeover bid that drove it higher. It's not trading based on anything other than that takeover bid happening or not happening. I think it's progressing. So thus, it just hasn't really done a whole heap. Trading options over takeover scenarios is difficult, and you probably just steer clear with it anyways. So love the question.
Yeah. Right. So let's go and have a look at CSL.
Yep.
So
ADX.
ADX is.
I know that's implied volatility.
That's implied
volatility. You need to add it.
Yeah.
Do you want me to do it? You seem to have forgotten where you're at. Your name is Patrick.
Yeah, thank you. You can do that.
Oh yeah, thanks, man. Yeah. But you don't care about the Plaza DI? I never saw anybody who made money off that.
No. Yeah.
But yeah, above 20, cool. I think it's what's the timing on that? Interesting. We clearly broke something. So what do we got? 20, 49 days. Okay. So that would be a fair trade. And the reason why you don't have it probably in your scans is because of the filter. So there's that little long. If you don't see that on your screen, by the way, Trudy, but in terms of where that's trading, that's a breakout. The default filter is between 15 and 200 because minus the excluding XJO, just because under 15 you have to put on a lot of trades to go in and you've got to put in a lot of contracts, which has a lot of ASX fees associated with it. So generally we don't look at anything below 15. Plus we found that there's anomalies from that smaller end of market. And over 200, I know I've explained this a couple of times, but I'll just reiterate, over 200, it's a leverage thing, so you know, proceed with your own risks of assignments become particularly, you know, like multi-$100,000 trades going in on like $1,000, $2,000 iron condor. So as a result, that's where we're at. But if you're inclined to go on into this, let's go do this. I can't believe CSL is at 290. I like how it was below 200. There's some people making a fortune out of this stuff.
The people that have traded this all the way up, because it just has continuously presented itself with lit long after lit long after lit long.
I've seen a few people step in front of the stand in front of the train as well. But yeah, I mean,
it's easy to do, right? So a lot of people will be going, oh, it's got to go down shortly. There's a lot to like about that trade. It's not too far away.
I've seen people. We've had this was even, I think, just about the time that we started coming together on this, but we had a whole heap of people getting short there, buying puts. Yeah. This is before all the trading systems and stuff that we sort of put out to the public.
Yeah.
And that was it was interesting. It's one of the driving factors for me to really hammer down building trading systems, and you know, that was awesome that we put two brains together on that one and turn it in possibly on all the corn stuff. But that was, you know, that was sort of interesting.
Mechanics of lit long criteria. Okay, do you want to just add the 200 day?
Have you given up? All right, moving average.
All right, so we're going to look at, Tria's just asked us to run through the rules on a lit long. So for those of you that are on this session, and as I mentioned earlier, we did put an invite out through my LinkedIn today, so there could be people on the session that aren't currently members and don't know our trading systems and the rules. If you're one of those people who'd like to get a trial, get training on it, get all the trade ideas and all that kind of stuff for a period of a month, type in yes and we'll organise to get that out to you. And I think there's a special on at the moment, some extra stuff in there, like a couple of free trades and maybe an extension of whatever. So if that's something you're interested in, you want to get access to that, type in yes, and we'll sort you out from that. What we're talking about here is a lit long trade. It's a breakout trade. So what we look at, in this case, this is a stock that's been breaking out constantly over a long period of time. But when a company gets to the point where it is breaking a key level, and the key level that we look at is the 52-week high, then that's the first thing that we go, okay, let's go and have a look at this. The second thing we look at is it actually trending up, right? So we want to see that a golden cross has occurred. For CSL, that occurred a long time ago and has been maintained over an extended period of time. We want to know that then the next thing we're checking is the stock higher than the 50-day moving average. So we're going to see it trading above the 50-day moving average, and we can see that it is. A little check that we always have is how far away from the 50-day moving average is it, because we have a repair built into this trade, or we'll have a switch built into the trade. So we don't want to be too far away from that 50-day moving average. And then we'll go and have a look at the ADX. And so at the bottom of our chart here we see the ADX, and the ADX is really telling us, is the trend present, right? Is this a real move? Is there any strength behind the move? You know, it gets rid of scenarios where something's just happened out of the blue, it's broken up, but there's no real move on. There is no groundswell behind the move. It's just something that's popped up. So in that instance, that all of those things line up, then that would be the starting point of saying technically the trade is there, right? Now, there are other factors that come into whether we'll trade this, and that's built into our trading scanning technology that we'll then go and have a look at. Are there other conditions there for us? Is the right time frame? There's volatility, right? All those factors that will then determine how we price the trade up. So from there we go, it would either pop up in our trading scans.
Which it is, so you can...
Right, so we can go to trading scans. And if it wasn't popping up in trading scans but it lined up and you wanted to do it anyway, you can then go and price it up through the options cookbook. If it's in the trading scans, and the trading scan will go green, so we can see there's two trades here that are approaching, so keep an eye out for. But in this one here, it's broken out and it's now a lit long active green box. If I click on that box, it will then pre-populate the trade for me, right? And I can go down here and I can see how this is sort of, basically it's usually an at-the-money bull put, or roughly an at-the-money bull put, and we can see all the details of the trade there. I won't go through all the details, but what I generally look at straight away is go, well, what's my max profit? What's my max loss, right? So here it's saying I can make $565 or I can lose 436, right? Now I might be happy to, let's increase that, sorry. As I click up, the contracts, you can see the max profit on the right-hand side is adjusting, and you can choose, well, I'd generally be looking at max losses to be the thing that will impact whether I do the trade or not. So I might go, okay, well, I'm willing to lose or risk $2,000 on this trade, and if I risk 2,000, I've got the ability to make 2,800. All right. So that, let's say that's the case for you.
Not a bad trade, actually.
All right. It is not a bad trade. So then I look at this and I go, well, what do I want to happen? All right. Well, I want the thing to go up, and our expectation is that based on it being a breakout, the most likely scenario based on our backtesting analysis is that it will go up. But as it goes up, I've got time working in my favour. All right. And so you can play through that, and so you can play around with that particular trade, right? So that, and then if I wanted to trade it, I click execute strategy and I can just put the trade straight through to market, right? That's a bit long. Trudy, did that answer your question regarding the mechanics? And the other thing I'd mention is that we have a switch on the trade, which will be, when we get into the trade, right, so I think we've got the chart here. What you have to understand is our thinking behind it and our motivation for going into the trade. So we're trading on what we think is the break of a pivot point, right? So that pivot point's broken. But when you're trading around a pivot point, the thing that you're most confident that will occur is a significant move, right? So you're not saying that that move will 100% of the time be up. It's the odds are it will be up. You've got the odds in your favour that will be up. And that when we go into the trade, we're not looking to get a small profit out of the trade. We trade this because we actually want we want the max profit. We're trading it to get the 2,820. So some people might go into a position where they're risking $2,000 and they might be going, well, I'm happy to get a $500 profit from my 2,000. No, we want 2,800. Yep. That's why we're doing the trade. Yep. We will stay in there for the 2,800 or almost all of it. It just depends on the circumstances of whether we go for the whole amount or, 90% of that max profit, right? But we're there for the max profit, right? And to know that when we're doing this, so if we do this and we get it right 70% of the time, well, we're very happy. We don't care if we make losses. But that doesn't mean that there isn't money to be made if it goes against us, right? So our point here is that this 50-day moving average, if it breaks that level, will be where we look at switching the trade into a bearish position and saying, okay, you know what? This is now this is now a correction, and we expect it to go down. And the biggest trades we've ever had where we've gone in and there's been a couple of cases where it's been like someone's put on $2,000, they've ended up with a $10,000 profit. Hasn't been because it's gone up, because they thought it was going to. It's actually because it's broken that 50-day move average and they've ripped out their trade. WPL.
There was a whole heap of them.
Yeah.
Paul just pointed out, by the way, when you were saying time is working in our favour. Yes, time is working in your favour based on where your mouse was at that point in time, which was above sort of the 294 break-even point on there. So break-even's 294. You're pointing there, and that's where time is in favour. But always check the payoff diagram. Thanks for that, Paul. One thing I just want to, while you're saying that, have a look at this. This is going back to your XJO idea again.
Yeah.
Price goes up, 275 to 290, and volatility goes up. So although the typical scenario of markets, what the traditional conventional thinking is, when the price goes up, volatility goes down and vice versa. But when volatility is low, you can get situations where it's the other way around. And it's just hedging activity, right? People are unsure about this move continuing. They're buying puts, driving up volatility, driving up the market for options, and there we go. But anyway, so interestingly enough, I think that there's potentially a similar scenario if you get XJ sub 10. And
if you start trading vol and you start look at the straddles and paper trade, then what I could just recommend that you do is that you look at the volatility. We'll start looking at the Greeks closely as things move, because you'll start to learn a lot more about options and the behaviour of options and where you're pulling your profit from. And when what Ivan's talking about is the behaviour of people, if you see the price goes up, your call options go up in value, but your puts don't lose as much value as you might think they would lose on the move up, because people are going and buying puts, and you're seeing the volatility being reflected on the put side, but not necessarily as much so on the call side.
Yep, and actually speaking of Greeks, for those of you, and I can see that there's a couple of people that I haven't seen before, a lot that I have. If you haven't went through the options game, and if you haven't seen the 10 by 10, so 10 daily 10-minute videos, let us know. By about video 5, 6, I talk a lot about Greeks and a lot about volatility in particular. And so if you want to get your head around, get a quick crash course and review, I guess, the basis of options, just type in 10 instead of yes, just so we don't get everything mixed up, so that we can subscribe you to that, and so you'll get the daily videos coming in. And so yes, that'll kick off from tomorrow or something. I just need to subscribe. So 10 daily 10-minute videos, starting from sort of the basics of options up until options pricing, market makers, all that kind of stuff.
Okay, fantastic. So for all those people that have requested it, we'll get that sorted out for you.
If you like,
well, both yours, mate. So if you want the 10, just the education, if you want to get access to the education, we've got all the platform, all the education built into it, the videos and everything. Just type in yes. Yeah. All right, yes, we'll give you that. And otherwise.
Can I just? Sorry, I have to answer this. Hi, just in terms of TradingView versus the charting package we use, the charting package that we've partnered with, them and TradingView don't get on very well. So we use a very. This is the only thing that we haven't built ourselves. We've changed the interface and we've made it ours. But the actual package powering our charting is an award-winning company called ChartIQ, which has become a very big standard, and they're doing some great things. TradingView was a bunch of, I think, it was Mike Wood somewhere, Bulgarians or something, or not Mike Wood, but somewhere closer, Ukrainians and Eastern European guys, that just because the cost of labor is so much cheaper in this particular country that it was, which is some ex-USSR country, they ripped them off. They literally copied, and then ChartIQ tried to sue them in cross-country. Anyway, it was just the most bizarre thing. You can Google this in, and it was the most bizarre story. So, so to answer your question in that, we've got a very good relationship with ChartIQ. I love the product that they're doing. They're really pushing the boundaries. It's really revolutionary what they're doing, and we're supporting those guys through and through. So no, we won't be doing anything with TradingView.
Just yet.
Just yet. Thanks. Have you got some arrangement that I haven't heard of? But no. So implied volatility or not, and the implied volatility stuff that we're doing is our proprietary information that we've been collating since we started TradeFloor, which is ultimately the company that built the technology, and it's been it's piles of data that we've been collating. It's up to like 10 or 15 gigabytes of stuff, and that implied volatility indicator is very difficult to come by. In fact, it's the only place that you can get it in Australia. It's the only actual forward-looking measure in the market, and the IV rank is proprietary to us as well. So if you want to get access to it, the only two places you can get it is the implied volatility platform or the options trading game when it's open.
And you've got that history in your backtester. Yes. So you can go back and one of the reasons why we've got a backtester is because Ivan and his guys started collating all of the IV data and saving that data across all of the different stocks each day. So we can go back.
50,000 options every hour. Yep. We've got pricing, actually the pricing from the market, so not kind of make pretend stuff. So if something far on the curve got mispriced, we've got it.
Yeah. So it allows you to go back and test. You know, if you wanted to go back and look at the strategy we were talking about today, the long straddle, and test how it would have behaved the previous couple of times it lined up, as you know what we were referring today, you can see, well, what would have happened if I put that trade on? And you can actually see what happened to volatility, and you can see whether you would have made money or didn't make money, or what scenarios, how long you should have stayed in the trade, closing out, those sorts of things. The only thing I would say is with those types of trades, don't get greedy.
Yep.
You know, if you're going in, you know, ultimately, you know, unless there's a massive breakdown, you know, you have to be pretty conservative and scalp your profits, is what I would say. All right. But anyway, I think we probably want to call the session to a halt. We've been rabbiting on for an hour.
Which is usually 15 minutes.
Usually 15. Thank you for everyone to come. I'll just make a couple of other things. Again, thank you to everyone, all our traders and clients that are online. I want to thank everyone for last year. The business, well, it's 4 times maybe even more than that in that period of a year. And we hope to do similar sorts of things this year. 4 times the volume. We've got a lot of stuff. I've got the rest of the day on a planning session for the year ahead. we've got a lot of things going on. We're really excited about what we're doing. We're doing what we wanted to do when we started this, which is help options traders. We are bloody minded about options trading. This is what we're here to do. We've got other businesses and we do other bits and pieces, but Ivan and I collaborate on this one thing, which is our passion, which is options trading, and everything that is being built into this is and the services and the other bits and pieces. So we'd like to thank everyone again, and really look forward to working with everyone in the year ahead. If we can be of any assistance, please reach out. And again, thank you again. We'll look forward to seeing you all on that. Thursdays is the day we're going to be, Ivan and I are going to be doing our trade group. We're working with our team up in Sydney to get them up and running, doing a trade group, and Tim's going to be doing a bit of extra stuff. So there'll be more online stuff in the year ahead. We'll see you all back on next Thursday midday.
Just really quickly, yesterday I was doing a webcast unrelated to this, and one of the guys came through who trades through us and gave the best compliment going. This is by far, it's just so far beyond anything else for options, and he's loving the stuff that we're doing. Which was all. It was just sort of, I was doing it with another company, and the chick that was doing it with me goes, wow, it's like it was so nice to hear that, and I hope that in a year's time, it's going to be next level as well. And we've pushed the boundaries even further. And
we definitely haven't done what we set out to do. We've got plenty of work ahead of us, so we're pumped. Anyway, thanks guys. Have a wonderful day, and see you back on next Thursday. Cheers.